Now we'll be discussing section B of taxation paper, November 2020 examination. K&K Limited, a registered supplier of Mumbai. K&K Limited is a registered supplier of Mumbai. Is a manufacturer of heavy machines. Its outward supplies exclusive of GST for the month of January are as follows. They have made an interstate supply. As you are aware, interstate supply will be liable for IGST and intrastate supply will be liable for CGST plus SGST. The rate of CGST, SGST and IGST on outward supply are 18% respectively. IGST and 9% is the CGST and 9% is the SGST. Details of the inward supplies during the month of January are as follows. Now raw material A, of which 70% inputs were procured and used and 30% were in stock at the end of January. So it doesn't matter where you will be entitled to take the credit even if you are having the inputs in stock. Here CGST and SGST paid has been provided. Raw material B, 50,000 rupees is the amount, of which 90% raw material received in factory and remaining material are completely damaged due to road accident on way to factory. There was no negligence on the part of K&K Limited. Now in case if any inputs are damaged, as per 17.5H, the credit in respect of them is blocked. Credit is blocked. So here we will be entitled to take the credit to the tune of what? 45,000 rupees only. That will only be what? Eligible here. Since 90% have been what? Received and balance 10% have been damaged. So we won't be entitled to take the credit as per section 17.5H since the same has been what? Damaged. Construction of pipelines laid outside the factory premises. So in this case, the pipelines have been laid outside the factory premises. So the same is not coming under the ambit of what? Plant and machinery, because plant and machinery excludes what? These pipelines which are laid outside the factory premises. That is not covered under the ambit of plant and machinery. So here credit will be blocked. Credit is blocked under section 17.5. Then insurance charges paid for trucks used for transportation of goods. The credit will be admissible in respect of trucks which are used for transportation of goods. Therefore, the insurance charges paid thereof will be, it will be an input service. It will be an input service and we will be entitled to take the credit of the same. Now they say there is no opening balance of any ITC and all conditions necessary for availing the ITC have been fulfilled. There is no opening balance but all conditions have been fulfilled. Details of GST paid on inward supplies are available in GSTR 2A except for raw material A. Except for what? The raw material A, for which supplier has not filed GSTR 1 for the month of January. For which the supplier has not filed GSTR 1 for the month of January. So here the details are not available. In this case, the details are not available. So as you are aware of the fact that in case if any details are not available in GSTR 2A, then here credit will not be admissible. They can take the credit whatever balance is there in GSTR 2A plus 10% of the same on provisional basis, the details of which have not been uploaded, the credit will not be admissible. But whatever details have been uploaded and they are reflected in GSTR 2A, so if 5 lakh is the balance in GSTR 2A, we can get on provisional basis 5 lakh plus 50,000. 10,000 means 10% of 5 lakh, that is 50,000. Hence, corresponding ITC is not reflecting in GSTR 2A. Raw material A, that is not been reflected here of KNK Limited. So, whatever is reflected there, we can take the credit of the same plus 10% on extra on the provisional basis. So, this has been an amendment which has been made in Rule 36.4, which we have seen. Now they are saying compute the amount of eligible ITC available for the month of January and net minimum GST payable in cash for the month of January 2020 after using the available ITC. So first is what? Computation of the eligible ITC. Computation of eligible ITC. Computation of eligible ITC for the month of January 2020. Here we have, so what information has been provided. It is CGST and SGST only. So we are having CGST, SGST, and this is particulars. First one is relating to the raw material A. Raw material A, since the details of outward supplies has not been uploaded by the supplier in GSTR 1 and same is not reflected in GSTR 2A. Hence, credit will not be admissible. Credit will not be admissible. Okay. Number two is raw material B. Raw material B, here, since 90% of the raw material has been received, since 10% of the raw material has been damaged, here 10% of the raw material has been damaged in transit. Credit cannot be taken since the same is blocked under section 17(5)(h). Credit cannot be taken since the same is blocked under section 17(5)(h). We are not entitled to take the credit in respect to the inputs which have been destroyed. So here credit will be 50,000 into 90%. That is 45,000 will be the CGST element and 45,000 will be the SGST element. Then number third is construction of pipelines laid outside the factory premises. Construction of pipelines laid outside factory premises. Here also the credit is blocked under section 17(5). As this pipelines laid outside the factory premises is not covered on the ambit of plant and machinery. Then fourth one is insurance charges. Insurance charges for trucks used for transportation of goods. Used for transportation of goods. So how much it is? It is 55,000. It will be an input service because trucks used for transportation of goods are eligible as capital goods. Therefore, whatever, insurance has been there, same will be eligible. It will be a input service. So this was about the admissible ITC. This is admissible input tax credit. Admissible input tax credit works out to be 45,000 plus 55,000, 1 lakh plus 10% of the input tax. 10% of admissible ITC can be taken on provisional basis. The same can be taken on what? Provisional basis. 10,000 rupees. So here total ITC, because in relation to raw material A, the same has not been uploaded in the GSTR1 and not reflected in our GSTR2A. Therefore, we can take the credit, whatever is available credit, 10% of the same. So total available ITC, 1,10,000 is here and 1,10,000 is here. Now they are asking, second one is here, amount of eligible ITC we have worked out, net minimum GST payable in cash after using the available ITC. So here, computation of output tax liability. Second part is computation of output tax liability. One is CGST, one is SGST, one is IGST. And this is taxable value. So first is, interstate supply. Interstate supply. Here interstate supply is how much? 85 lakhs. It is 85 lakhs. Same will be chargeable with 18% IGST. 85 lakhs into 18%. That is 1 lakh, 15 lakh, 30,000. That is the IGST element. 85 lakhs into 18%. 15 lakh and 30,000. Then intrastate supply. Intrastate supply. How much intrastate supply it is? 15 lakhs. The same will be chargeable with rate of 9% CGST and 9% SGST. Okay. So 15 lakhs into 9%, 1,35,000 and 1,35,000. So total output tax liability, that is 135 and 15 lakh and 30,000. Okay. Then we'll be utilizing the input tax credit. We'll be utilizing what? The input tax credit. Now we are having the credit to the extent of 1,10,000 and 1,10,000 less ITC. CGST credit is 1,10,000. SGST credit is 1,10,000. So here we'll be using the same amount of output tax liability to be paid in cash. It will be 25,000 here, 25,000 here, and 15 lakh and 30,000. So this will be the amount to be paid in cash through e-cash ledger, electronic cash ledger. So this was our first question, which was asked for 8 marks. Okay. So they were asking for the computation of eligible ITC as well as the net minimum GST payable in cash after using the input tax credit. So this was our first question which we have discussed about the GST law.